Yeah, this one, maybe Dan, you can answer, but looking at green building technologies, what are you seeing as those technologies as having the biggest payoff? And going back to what was just said from a private equity investment standpoint, you know, how do you know what the next technology is going to be, what's really going to pan out? Because there's a lot of money being poured into a lot of sectors that don't have any payoff whatsoever.
You know, one of the biggest opportunities we see out there is just in retro commissioning and making buildings perform the way they were originally designed. So it's getting back in and upgrading the control systems and fine-tuning the buildings. So that's one of the big opportunities right now from a pure technology standpoint. So it's kind of more of that in terms of putting in controls and monitoring system that allow real-time monitoring control of the building systems and equipment, so that people can see when things are starting to deviate from their optimum design performance and respond to that, again, real time. So that's a great area of opportunity we see. You know, lighting technology continues to advance. You know, the compact fluorescents are at some point just, you know, being leapfrogged by LED technology that's, you know, coming down in price. You know, is you know, a tenth of the energy, less, you know, heat release, better light. You know, that's going to really you know, be a huge market opportunity to upgrade lighting systems in buildings. So it's a lot of those, you know, lighting, commissioning, control systems, and then you can start to look at, you know, again, you know, talking about the existing buildings, you know, making sure the envelope is tight. It's after you do all that that we would suggest people look at alternative energy sources and, you know, solar and wind and, you know, geothermal and things like that. So a lot of it, you know, right now the opportunity is more around the fundamentals, and then begin to, you know, implement some of these new technologies like LED lighting as the economics prove out.
Just another note of caution. Remember, Helena was talking about that you couldn't get people to turn off lights, and I've heard even that some of these remarkable new lighting systems are so efficient, 1/10, that people literally say things like, they're so efficient, you don't have to turn them off. So again, there's a human behavioral element here that can be quite disturbing. Next question.
From a global sustainability perspective, can you explain why LEED has been chosen over other international building assessment systems?
That sounds like it's for you, Roger.
Well, it's not always chosen. There are places and countries where other systems do a wonderful job, and for the first system in the world was the BRE system in England, which is a very, very competent system. So. It is true that LEED is used by a very large percentage over all the other systems. I think part of that is that it has de facto become a kind of global benchmark, so that other systems are being used very effectively regionally. They're focusing on some regional priorities. They're being tailored to address regional issues. And LEED has been initially almost a victim of its own success in that it is used so often. And in China, for example, hundreds and hundreds of buildings are registering. And in China, you have to translate every invoice into English to send it. I mean, it's just a nightmare. We're doing everything we can to make it easier for people to use LEED. But the fact that it's being used in such substantial quantities, I think, is in part the fact that it's become a kind of de facto global standard. I was in Finland last week, and they were telling me that for the first time in Finnish history, 60% of all commercial transactions have an international investor. Well, the international investor wants an international benchmark or globally recognized benchmark. So I think that's one of the reasons. Also, it's fun to use. People enjoy it. It's, you know, it may not be the best diagnostic tool. The German system is very good for that. It may not be the best in a variety of ways, but it really is something that people engage with and gets people to start thinking and working as a team. So, next question.
From the perspective of an international real estate investor, does the weakening dollar encourage people to not only come to the United States to buy, but also to spend money on the retrofit?
It's a good question. I think it's, capital flows are sort of an elusive thing to figure out right now. I think you would think that the weak dollar, frankly, it's been weak for quite a while relative to other currencies, so you would have thought that the weak dollar would have had a lot to do with flows into the U.S. market over the last several years, and in reality it hasn't happened to a large extent because of a weak dollar. Now, what I think is starting to happen now, whether we like it or not here in the United States, is that there's a belief out there that the U.S. is now cheap. That there has been a correction in value. So the combination of true fundamental risk or better fundamental characteristics, not so much in terms of today's supply and demand, but in terms of values over the long term and the probability of international capital, which tends to be much longer term, by the way, than most, is that now is a good time to be exposed to the United States for a variety of reasons. Particularly if you're a long-term investor, you might still incur some short-term issues. We still might have some bumps in the road, but a lot of international capital is moving more for that reason than the currency. Now, the currency certainly helps, and the currency can help in terms of acquiring and procuring retrofit dollars or underwriting those retrofit dollars in a different currency. But at the end of the day, again, I think it does get back to the value, and I do think that there are pools of capital. I know there are pools of capital that are moving, but I think it's also misleading to think they're just going to, again, move in and just make everything right again, and we're going to go back to 2006. Foreign capital, I think, historically in the United States has been improperly considered as sort of the dumb capital. Okay, here come the Japanese into the market in the 70s. Now, many people in this room weren't even alive in the 70s, but that's when I got into the business, in the early 80s, and everybody's saying, well, the Japanese are overpaying for this, they're overpaying for that, sell into that, and there have been a variety of examples of that. But today, I do believe, because of transparency, because of more data, because of more sophistication, because the real estate asset class has grown up as a mature and more underwritable asset class, that there's no dumb money out there anywhere, in my opinion. But there is smart money that's seeing the U.S. as a buy. I've heard the U.S. referred to as the most low-risk emerging market in the world from a real estate risk point of view, because you have all the transparency and the financial regulations and the things that investors worry about in true emerging markets, but you have sort of post-correction valuations that might allow you to really be opportunistic. So I think that's more what's driving it than the currency itself.
Okay. We have time for the next two questions, but we're going to have the questions be very short and the answers be very short.
Sorry, right.
Because we are now closing down. Yes?
No problem. The big elephant in the room in terms of operations and costs is human behavior. Are you seeing landlords be able to put lease clauses or other mechanisms in, within their agreements with tenants to help incentivize them to turn off the lights, to use less energy, to just be more efficient?
Okay, maybe Dan, you could field the green lease question.
Well, yeah, I mean, we do see that, and that's going to take a long time to work through the system, but we do see green leases emerging, and both landlords and tenants having interest. Tenants are choosing buildings because they're green and high-performance buildings, and they want to hold the landlord accountable for its ongoing performance, per the previous question about, buildings not living up to their expectations, and likewise, the landlord, certainly wants the tenant to behave in a certain way and participate in programs. So you're starting to see that happen. The big corporates who are occupying these space have their own corporate programs and employee engagement programs and reminders to turn off lights, that they're using their own space, and then those programs are being moved into their lease space and really trying to push the acknowledgement that employee behavior can have a huge impact. So all the incentives are there, and in some cases I don't think you even need the lease clauses. It's more the employee engagement programs that you're seeing that are sort of taking over and just driving that behavior because people think it's the right thing to do.
I mean, your example on the Empire State Chiller plant showed just how important that behavior is in terms of dollars and not having to expand that plant. So.
Well, it's also just sort of doing the right things in the right order, right? You don't look at upgrading the central plant until you've looked at ways to reduce the loads first, and then you look at what you need to address those loads.
Thanks.
The green lease provision that's particularly valuable just from a financial standpoint is the one that allows you to separately meter your space.
Yes.
The U.S. Green Building Council's offices have separately metered space, and we recently got a rebate of $100,000. That means that had we been on a regular lease paying our pro rata share of energy in the entire building, we would have paid $100,000 more. Now, admittedly, you go to the USGBC, all my staff seem to work in the dark, so it's a very, unique setting, but there's dollars and cents associated with it. Next.
So we've heard a lot of the benefits from green buildings are human benefits, your productivity and better health, and so a lot of big companies will ask to lease a green building because it's, helps their employees. But we haven't seen much of LEED certification kind of moving into sort of the multifamily side where really people spend 2/3 of their time not in their workplace. So are there bottom line reasons for that? Is it because individual tenants don't have sort of the buying power? The large company goes to an office owner and says, I want this kind of building, whereas each individual personal tenant hasn't been able to manage that push?
I think you answered your own question rather elegantly. In the case of apartment buildings, I don't know if you guys want to take a stab at that. Sure. Go ahead, Chuck.
Yeah, I think you did answer the question a bit. I think the nature of the apartment asset structure is they are actually the tenant typically is in control of a lot of these things. The units tend to be separately metered, like Roger said, and so it's really up to the tenant's practices. So it's a little harder for the landlord to necessarily drive or be responsible for some of the aspects of energy and green type performance. Having said that, particularly in CBDs and higher density projects, you see a lot of similarities between high-rise residential and office properties and hotels and so on. So again, I'll just go back to Greenprint for a second. If you look at the first page in our membership, we do have one of the largest publicly traded multifamily companies in the US as a member, Avalon Bay, and we have one of the larger residential companies in Germany. Patrizia is one of our members too. So they clearly believe that there's a way to drive performance in the residential sector, the multifamily residential sector.
Thank you very much. Thank you, Sophia, Dan, Chuck, who's actually making his debut in front of his own child here at Georgetown.
I don't think she showed up.
I think, well, if she did show up, I think she'd be very proud of him. Let's go next.
And thank you, Roger Platt and USGBC for helping us out with this. Helena Durst had to leave early. Thanks very much to her for coming down from New York to do this for us. Thanks again to our keynote speaker, Eleni Reed, in our first panel. Thanks again to Uwe Brandis and the ULI for all their help with the program and their great fall conference this week. As a brief aside, we invite you all to another event we're holding on November 9th, a program we are co-sponsoring with the Building Owners and Managers Association on Real Estate in 2020, a vision for the future, no pun intended, which assesses the likely environmental, energy, and financial condition of real estate 10 years from now. There are flyers for this on the table in the foyer, and it's also on our website. Materials about the Georgetown Real Estate Program are also on the table. Thanks to the Georgetown Real Estate Program staff, Director Jill Phaneuf, Program Manager Christy Anderson, and our Student Program Associate Gina Yang. Thanks to all of you for attending Green Real Estate and National Roundup. Good evening. Hopefully some of our panelists and faculty will stick around and chat a little bit if you're so inclined. Thanks.